Marcus, how's the trade
Sean,
going?
trade is going as always. We're hodling Bitcoin, and even though the price is moving sideways, maybe even a little bit downwards, who knows where it's going from here? We got that long-term perspective, and it's looking good.
All right, that's what I like to hear. Good trade, and price is crabbing. Crab walk is what's going on. So welcome everybody to episode 10 of Bitcoiner's Guide. This is the show that we wish we would have had when we first started learning about Bitcoin. So we made it for you, or for your friends, or for whoever wants to listen in. I'm Big Sean Harris, and this is Plan Marcus. We are your hosts. Just a timestamp and price stamp. Currently, it is 12:57 p.m. here in beautiful Salt Lake City, Utah. Yes, I'm here in the Salt Lake City Valley, and there's a lot of mountains around me. Current price of Bitcoin on this beautiful Monday is $38,000 and some change, up 0.54% in the last 24 hours. So we've been chilling around 40,000 and some change. Now we're sitting at 38,000 and some change. Marcus and I are going to get into this right now. We wanted to talk about some 4-year cycles, and we're going to get straight into the Bitcoiner's Guide tip of the week. We're going to give you just the tip. And this Bitcoiner's Guide tip of the week is sponsored by mfmerch.com, the best merch in Bitcoin. I don't know. It's not the best. Maybe it is. Maybe it isn't. It's up for you to decide. Go check it out. So Bitcoiner's Guide tip of the week, 4-year cycles. Historically, we've had in Bitcoin's price run up since 2009, we've had these 4-year cycles, and they've been based on the halving. And the halving is, it has to do with how much Bitcoin gets rewarded from the Bitcoin block reward. So every time Bitcoin is mined, currently the miner will receive 6.25 Bitcoin in the block reward, plus some transaction fees from the blockchain, from Bitcoin's blockchain. Every 4 years, well, actually every 210,000 blocks, which normally ends up being about every 4 years, that block reward gets cut in half. And so that's what we call the halving. Plan Marcus is currently sharing on his screen Bitcoin's price run up, and this is on a log scale, correct? If I'm correct, right?
Yeah, correct.
So this is Bitcoin's price, and it's moved up after every halving. For about the next 18 months after a halving, the price will run up super high, and then it'll go back down and have a big run off top, and then it'll slowly go through a bear market, and then it'll run right back up again after the halving, after about 18 months after halving, and then have a huge blow off top again. And this normally comes from what us Bitcoiners think of as a supply shock. So Bitcoin, when it halves, there's less Bitcoin that's being produced, so or it's being mined. So when there's less Bitcoin that's being mined, then that means it's just supply and demand 101. When there's less of a supply, demand goes up. And so that's what's been happening over these last 13 years or so since Bitcoin's been created, with the 4-year cycles. Now, the big question, and this is what Marcus and I always talk about, is, are we still in the 4-year cycles? Are we in a super cycle? You know, are the cycles historically moving the way that they used to, and what to expect from Bitcoin's price or from these 4-year cycles? So this is something that Marcus and I talk about even off the air nonstop, and we can't ever come to an agreement on it. So we figured we might as well talk about it and let you decide what you think. So Marcus, why don't you go ahead and show us what we're looking at? If anyone's listening to this not on YouTube, we're looking at Bitcoin's price on a log chart going up.
Yeah, well, this segment you have to watch it, otherwise you skip forward a couple of minutes because it doesn't really make sense listening to it, or maybe you can, but I don't think we're gonna be able to like say everything we're seeing on screen. Yeah, so basically what I have, tradingview.com, I can recommend everybody to go to tradingview.com. It's a free website. You basically have all the charts there from all the markets all over the world, and it's completely for free. So it's a great tool. You can use the charts, you can do measurements. Anyway, it's free, it's great, it works great. I love how certain things, you know, basically just information, how Jeff Booth always says, you know, information eventually trends to zero because it's just free. It has no, you know, incremental cost to spread it to more people. So eventually it just trends to zero. And I think TradingView is a great example of this. However, there is also a paid plan where you can get like more functions and stuff, but there's really no need for it, to be honest. So what are we looking at? The Bitcoin US dollar graph. Obviously, you've got some red and green candles. I think everybody knows what those are. We're looking at the monthly chart. So every bar is 1 month. And basically here we're taking the data off of the exchange called Bitstamp. So they're the ones providing this data. And they have a Bitcoin price starting from the August 2011. So that's pretty early, right? I remember, you know, like January 2009, Bitcoin was launched by Satoshi. Obviously, it didn't have a price in for the most part of that first year. I don't even know exactly when Bitcoin Pizza Days are off the top of my head. Was that 29 or 2010? I believe it was 2010.
Yeah, I think
when,
so. And I don't even know if that actually, I could be wrong here, but I'm not sure if that actually gave Bitcoin an official price.
Yeah, sure it was, because they know how many Bitcoins he paid. Out of my head, it was 60,000 Bitcoins for 2 pizzas, and the 2 pizzas were worth about 32 bucks. So that gives you a Bitcoin price. I mean, they exchanged it. The pizzas had a price. It was a fixed set of Bitcoin, so you have a price.
Yeah, but what I'm saying is, I realized that there was, okay, we recognize that Bitcoin is whatever the 10,000 Bitcoins divided by the 2 pizzas in dollar terms. But I'm not sure if right after that happened, all of a sudden now you have exchanges that are selling Bitcoin at that equivalent price, and it's trending up and down after that. So I think it's
that's
still
pretty. It's a pretty interesting discussion what you're bringing up, because you know, if you go to, for instance, Bitstamp, you'll find a Bitcoin price there, which is now $38,229.83. But if I were to open, for instance, the Bitcoin price on, say, Binance or on Coinbase or some other exchange, there's small deviations there. So there's not one fixed price. You know, it's whatever it is trading for in whatever market you're trading it. So different exchanges are sort of different markets because different platforms. So sometimes they can deviate from each other. Also, you have different currency pairs. And there's even a lot of people, I believe even the FTX guy, that's how he made all his money. He was just noticing all these little differences. And if you do that in like large volumes and you see hey, this exchange it's selling for $100 and the other exchange it's selling for $101, that means I can just like buy a bunch over there and sell a bunch on this exchange, and I just made some money, right?
A bunch of arbitrage.
Yeah, but we're going on like massive tangents here. We need we're short on time, right? So again, so we have the price throughout the years. It is a log chart, so that means you know, from 0 to 10 is the same distance as from 10 to 100, even though it's times 10. It's the same difference as from 100 to 1,000. If you don't put it on log scale, it'll look something like this. Then all my lines start to look really funny. So just ignore those for a little bit. But then your price looks like this. So some people might see this in their app. They'll recognize this price graph. Yeah. And it looks like Bitcoin hasn't done anything since 2009. It was just flat. And then in 2017, we had our first run up, and now again. But as you can see, that is completely not the case, because if I set this to auto and you scroll, you'll see that every year in front of it, you also, I don't know if that's coming across right now. Yeah. But we're looking at it in log scale because that gives a nicer view of the different run-ups we had.
Yeah, and on log scale, it's interesting because on a log scale, it's showing the price run up is actually very steady and
Yeah.
it's very cyclical. So it's kind of cool to see.
Yeah, this to me, when I mean I got into it like around here in 2017, I remember it well. This graph was looking like, oh my God, this thing is just going up and up. And I was like looking at the beginning, it did it before.
Yeah.
And yes, it can crash, you know, like maybe I should just buy some, and but it could go down as well. You saw it correct earlier and it just keep going up. But what was interesting, the blue lines here is when the halvings occurred. And this blue line here in February of 24 is my guesstimate of when the next halving will occur, because the halvings occur every 210,000 blocks. Every block is about 10 minutes, so that gives it just a little less than 4 years. So the first halving was around November 2012. Then the second halving was in July 2016. Then we had the other halving in May of 2020, the last one. And the next halving will be somewhere early 2024. And what you can see after each halving, we get this run up, not instantly. I mean, the halving occurs, nothing really happens. The month after, nothing really happens, but then she starts moving. 2016, it took a lot longer before that run up came. And these yellow lines here, they mark the end of like the 4 years. Basically, it's just the 1st of January and then constantly 4 years in between. So, you know, kind of marking the 4-year cycles, because especially the first time, it was always around January, around the end of the year, that, you know, it topped out and we went to like this deep bear market. Then 4 years later, we arrived again at the top. Now, the last cycle, we went down, and the minute she started going back up, Bitcoin went up really fast. So everybody's like, oh, we're going again. But then, no, kind of corrected back. We had the halving, and then we started running a lot faster than expected, and we stopped a lot earlier than expected. So in that sense, it was different. At the same time, you know, I can still clearly see like this pattern in here, right? It's almost too obvious. Also, if you look at like the RSI, it's like relative strength index is basically just showing you, has Bitcoin gone up comparatively to like the previous bars, or has it been going down, right? And then
RSI, bunch of garbage. I don't even know what the RSI means.
RSI, relative strength index. That's what I'm trying to explain here. Don't worry too much about it, but you know, you can clearly see here as well, you know, where you're going to go into like this massive bull run, then we correct. And there, you know, and there's also the theory about the sentiment of market cycles, where they say you have like this phase of accumulation, there's like hope, there's enthusiasm, then there's euphoria. Then, as you know, the price rolls over, there's this denial phase where people are like, don't worry, this is just another dip, you know, we're going to correct and the bull run is going to continue. It usually makes like this double top. You have one clearly here. Here there was also a double top, and here we've seen like a clear double top. After the double top, we keep correcting down, then people are still somewhat in denial, and then fear starts to happen, right? And then after fear, if you can Google this, you know, like I should have prepared this, but after fear, then there's often capitulation and desperation.
Yeah.
Right. So the chat we were having just like 2 minutes before we started recording, you were like, all right, let's do this live because I want to say something. I was saying, well, look, after, you know, like now we can only call it like a top, right? Because calling it a top over here, you could have looked foolish, because if we would have just continued, it would have never been a top. So nobody was calling it a bear market here. I mean, some people were, sure, but we were saying you're a fucking bear. There's no bear market. You know, Bitcoin is going to continue. This was all China ban mining. And we actually made a new all-time high, because we ended up a little bit higher than the high over here.
Yeah.
But now that we're going back down and looking at these previous cycles, it's like, well, it's kind of hard to say that this cycle is completely different. In my eyes, I still see a clear halving run up correction, halving run up correction, halving run up
See, this is
So
where,
based on that pattern, you could argue, right,
yes,
that now we had a run up, so now we're going to go into this correction phase, and we might, as you can see here as well, we kissed the, which is here, the 50 moving average. So this blue line is the average of the 50
weeks,
bars.
50 month.
In this case, I'm looking at the monthly chart. So
Yeah.
the 50 monthly close is based on the past 50 months. If I change this to like a week,
Nah.
you get more bars, yeah, and then you get the line starts earlier because you get 50 weeks earlier.
Yeah.
But I like to zoom out because this is apparently, it's very funny because we had like COVID here, right? You can see it in the charts. Bitcoin quickly just corrected and went back onto its normal pattern, right? So
Yeah.
this bigger zoomed out pattern you're seeing here, yeah, seems pretty strong. Like you said, it's just following. If you just like look at like a floor model type thing, this green line here is just a linear line on a logarithmic scale.
Which is
That
amazing.
literally means constant exponential growth. That's what Bitcoin has been in. We've been in a bull run since 2009, Sean. I mean, forget
Yes.
these corrections. This was just like extreme greed, I guess, but we've been in a constant exponential growth pattern
Yes.
since Bitcoin had a price. That's the big picture here. Yeah, let's
That
not
is.
get confused about whether or not we're gonna have a little correction here to the downside still or not. Yeah, and whether or not you want to risk doing that, because what if we just run back up and you were here sitting on the sidelines while Bitcoin goes to $150,000, right? I'd never tell anybody to be like, oh yeah, it's gonna touch the blue line again, right? Because it did it here and it did it there.
Would you never say that, or would you never say that?
Well, that's why we're talking about it, right? Because I
Yes.
did mention it. It's like we're seeing these obvious patterns which are hard not to see. I mean, a
Yeah.
kid can see this, right? I mean, it's not like rocket science we're looking at
Okay,
here.
but let's look at the last. Let's look at 2021, right?
Yeah. So we're
2021,
looking at 21. Yeah.
and this is where Marcus and I always disagree, is because Marcus will be like, it's a clear pattern. It's gone up these last three. In 2017 it went up. In 2013 it went up, and he's like, in 2021 they did the same thing. And I'm looking at this thing and I'm like, in 2013 and 2017 it like basically hits that top line, and in 2021 it gets like halfway there on the log scale. So then that makes me think, if it only goes halfway up, I don't think there's gonna be a huge dip. And people are saying like, oh, well, there could be some, like, another black swan event like COVID, and Bitcoin's price drops 50%. But I don't know. It's really hard for me to see that happening, because there's a war in Ukraine and nothing happened after that. I think people just know that the money printer is going to be turned on exponentially and faster. And as the money printer continues to burr harder, then these cycles are just going to get erased. I think there's more. I am.
But the truth is though, is that they're cutting back on the printer right now, Sean.
Okay,
So right
I
or not?
mean,
They're still printing every month. Don't get me wrong. It's just the amount they're printing, they're reducing it every month.
I just refuse to believe the crack addict when he tells me that's his last. That's the last time he's gonna use crack. Like, I refuse to believe it. So if
Yeah, it's like the crack addict, who has abused a lot in the past. He's tried to stop in the past. Yeah,
yes,
when he stopped, it went better for a little bit, but then, but at the first thing, he started using again.
the relapse.
So even now, the central bank is saying they're gonna like tighten and gonna behave. Yeah, we both have the feeling that they won't last that long, right? But in the meantime, they are doing it.
Yeah. Well,
So
they're raising.
whatever that means for the coming 6 months to a year, I don't know, but it could mean that, like you see it everywhere. It's not just like here at the Bitcoin chart, because if you look at the S&P 500, if you look at the NASDAQ, you know, they're all rolling over. You look at all the FANG stocks, they're all rolling over. They're in heavy weather right now. I mean, Netflix lost something like 50%, I believe. Don't pin me on the numbers, but you know, we talk about crypto being volatile. This is like a FANG stock that just like got cut in half, right? It's
They're gonna have to take the N out of FANG. Don't ask me what that's called. We'll see what.
Yeah.
But so here's like the whole gist of all
One
of
more
it.
thing, Sean, right?
Okay,
Because
all
what I
right.
said, like it can go to the blue
Word
line.
it.
On the other hand, I've just said as well, look, this green line,
Yes.
except for like here in 2012, like early days when Bitcoin was like under $20, right? Like it's just been this green line has been like one of the sweetest spots to be able to buy, especially if it falls under this green line, right? I mean, all throughout Bitcoin history, you would have wanted to buy under this green line. I mean,
It's
here
almost
it
like
barely got under it. This was COVID where it only fell under it, right? And it's just been going up from there. And we're under the line right now. So this could be like the absolute bottom moving forward from here.
It's like the Mayer multiple, right? When you get into a point like this, and you get to a time where it's like, okay, if Bitcoin continues on its historic rise, which it makes sense that it would with everything that's going on with the Federal Reserve and with people, more and more people understanding what's happening with money. If it continues on its historic rise, then you want to buy at levels, you want to buy at the lower, you want to buy dips, right? So it's like, this is a dip. If you look at the log scale, this is definitely a dip. Now, maybe a dip for ants, but that's when you want to buy. You want a DCA, continue to buy out of every paycheck. And if there's a dip, you want to stack a little bit harder if you can. My issue is that I just always end up smash buying everything that I have. And so then I run out of that dry powder when it's time to buy in a bigger dip. But so talking about this, like, why do I think this is important? Because like recently, I was just telling Marcus this before too. I was like, honestly, like I haven't been looking at price that much as what I used to. Like if I'm on Twitter and everyone's talking about a dip, then I'll look at the price or something. Or if everyone's like, oh, we're at a massive pump, then I look at the price, but I haven't been looking at the price as much. And I think more than anything, just because it hasn't interested me as much as of late, because I've kind of gotten this mindset that I think Bitcoin's in a super cycle. And all that means to me is that it's going to do something different than what it's historically done. So like it hasn't hit that high peak like we thought it would after the 18 months after the halving. I don't think it's going to drop 80% from its quote unquote top. And I think it's just going to be a little bit more erratic. And I think it's going to get like right now it's been like doing this crab walk thing, but I think it's going to end up being like gold priced in the Weimar mark, in the German mark in the 1920s when the Weimar Republic went through hyperinflation. And if you looked at that thing, it just went up and down, priced in Weimar marks. And I think that's what Bitcoin's going to do. So that's what I think to me is the super cycle. And I think that we're watching that happen right now. And also I think like, okay, well, what should I expect? Because a lot of people traded in 2020 and 2021 based off of 2013 and 2017, but those are only 2 touch points. So I don't like to just trade off of, first of all, I don't trade. I don't short Bitcoin. I don't long Bitcoin. I just buy Bitcoin. So I guess I am long Bitcoin because I buy Bitcoin. But I don't buy like futures contracts that are long.
This is your model, right, Sean? You think this is going to happen? So we're just going to shoot straight up to like $100 trillion.
No, it's gonna do
for Bitcoin.
It's gonna zigzag all the way up there. And then one day it'll do that. Yes, it will do that. Like that's the gradually then suddenly.
It is pretty crazy, right? I mean,
yeah.
So just, like if you look at this graph, and I just switched to the euro chart just so that I don't have like all those crazy lines in the screen, so you can just see the price.
Yeah.
I mean, I love looking at it this way, like you zoom out to like 2060,
Yeah.
which is basically like what, 40 years from now. Look at this, right? We're looking, what is this? This is only like the first 10 years of a new asset that's
Yeah.
going to be around for more than 100 years. Who knows for how long, right?
Thousands of years.
And it's not just an asset, it's an asset that's still being adopted and that's even still being developed, right? I mean, to me, it really still feels like the internet where you still had to, like, if you want to send an email, you first had to like hook up your modem and dial into your local phone line and then make that internet connection. Then you were able to, through some email client, which you had to set up first, you'd be able to send somebody a message across the internet. With time, the usability of the technology becomes easier. The more and more people will start using it instead of just the nerds and the geeks who are kind of tech savvy early on, Like you still have to be kind of tech savvy if you want to like custody your own Bitcoin at this point. It's really not easy, It's even just to understand the concept of Bitcoin and what is it like? What am I sending? Am I holding my Bitcoins in this USB stick? No, what are UTXOs and all that kind of stuff? It's not easy to grasp for people. What is a wallet and how do I get one? And like which website do I go to? Yeah, there is no website. Why not? Well, because it's decentralized. So, and then you're looking at this graph. And it's like this is just like the first, like even at like Bitcoin's issuance schedule, like we already mined 19 million Bitcoins, right? So this is like the first. So to me,
that's what's insane.
On a log scale, it will probably have diminishing. It'll steady out at some point, right? Once we go
but not
like
soon.
90% penetration of the population. But right now we're at like less than 20%, of the Western world holds some form of crypto. If you really look at like Bitcoin and self-custody, it's going to be probably less than 10%. So we're looking at this thing that is not just like a stock or like gold. No, this thing is still adopting, right? It's still spreading throughout the world. People are still coming to understand what it is. Hardly anybody is still using it. So I think whether it's going to be linear, it's probably not going to stay linear. There might be this slowly, then suddenly thing where like we get this massive, all of a sudden, everybody will want Bitcoin. Is going to be like complete failure of fiat, euros and dollars and bank runs all over the world. Everybody tried to get the Bitcoin because all of a sudden everybody understands its game theory. Yeah. Or we just go slowly and gradually and we top out somewhere at like, what is it? I mean, this is a 30,000, here's 100,000. So here's 1 million, here's 10 million, 20 million, 100 million. Chill. Dude, I can totally see like from this graph, I can totally see like $100 million per coin. Stop it. This is not financial advice. But why the hell would you worry? Why the hell would you worry about trading here, right? You just got to make sure get your.
I thought I was the permeable. Dude, like this is the if Bitcoin, the dollar's gonna be gone before Bitcoin, and one Bitcoin is $100 million. Like the dollar won't exist at that time. That's just how I look at it. Like I don't know why people would even.
I'm not too sure. Yeah, I don't know, man. I don't know.
It wouldn't be priced in dollars anyway. But yes,
I can see both.
Holding one, like if you can get just one Bitcoin, which if there's a lot of people that can, even though it's at $38,000, there's a lot of people that still can do that. If you can get one, that's pretty amazing. If you can get half of a Bitcoin, like whatever you can get, just get it, just stack it.
Dude, it's so personal, right? Like one Bitcoin is a lot of money, right? For a lot of people. I think one Bitcoin is already out of play for, depending on your age and what country you're born in, like one Bitcoin is already a pretty tall ask for, if you look at people like between 20 and 40, like most people don't have like 40,000 euros or dollars lying around.
And if they do, they don't have the balls to put it all in one
right.
Or especially Bitcoin, right? Yeah. It takes guts and it takes conviction to really do the work. and study out what it is and its history and the history of money to understand the future of money. So again, right, are we in a super cycle? No one really knows. Like maybe people thought we were in a super cycle in 2017, and then there was a huge blow off top, and then people were like, wow, I guess it's not. So could we still be in 4-year cycles? Sure, we could be. I don't think we are. I could be wrong, you know, and like what to expect. Expect something that you aren't thinking will happen to happen. This is the point I wanted to make. Expect something that you aren't, expect the unexpected. That's what you should expect. Is there going to be a blow off top? If you think that's going to happen, expect something else to happen. Is it going to, and it's more than just like two options. Oh, this thing can go to the moon or it can go to zero. Like, no, it can go up to a certain price level, then it can drop down and go back up and keep doing that. It can run up high, then plateau, then run up high again. There's a lot of different things that Bitcoin's price can do. And so this is why I always say, don't trade Bitcoin, definitely don't sell Bitcoin, and don't short it, because you have no idea what's going to happen.
Right. We don't know what's going to happen. So we just expect it to go up. So look, one more thing, right? I mean, in this period between these two lines, we're having 900 Bitcoin mined every day. Yeah. Here it was 1,800 Bitcoins mined every day. And depending on what the price is, you can then calculate like, okay, so just to maintain the price, right? I believe right now is something like 35 million. Is that correct? Like 900 Bitcoin would be like 38. So if it was 1,000, it would be like 38 million. So yeah, it's about 35 million US dollars every day needs to, come in to buy up like the newly minted.
Not necessarily. That's not necessarily true.
I know, but just to give you an idea, right? I know it's not exactly true. What's going to happen here after the halving? It's not going to be 900 Bitcoins per day. It's not going to be 450 Bitcoins mined every day. So if that amount of money that comes in every day, or that the daily demand stays the same, I actually expect it to grow as Bitcoin grows and more people start using it, and DCA a little bit every day. This is a global thing. I mean, 35 million may sound like a lot, but for the whole world, it's not a lot. Like every day there's a lottery and 900 people can get a Bitcoin. That's 900 people in the whole world is really not a lot. Right? And then we have people like Michael Saylor just buying up like hundreds of Bitcoins at a time. So here we're going to get cut in half. So you can also see it that, okay, it had this price, which was around like $10 before the halving. Then after the halving, let's say the level was, let's just stay on the low side, it maintained that $200 level, right? Mm-hmm. Then we had the next halving, price runs up too high, it corrects, but we maintain the $3,000 level. So that's like times 10, 3,000. Here it's like we're maintaining the 30,000 level. It's another times 10. So after the next halving, we're talking what? $250,000. That should be the low end if we continue with this halving cycles, right? So it's
Can I explain too why it's like when 900 Bitcoin are mined at a price of $38,000 per Bitcoin, it's not like people aren't buying $35 million of Bitcoin. $35 million of Bitcoin isn't bought every day, because the reason why is because the price is created on the margins. So if 900 Bitcoin are mined, but the miners keep 850 of those Bitcoin, well, then only 50 of those Bitcoin are actually even for sale. And then you got to think about, okay, and then there's other people that are trading, buying and selling. So maybe there's more, maybe there's less. And so it just depends on who's willing to sell their Bitcoin at that price level. Because if I have my Bitcoin and that's like part of the supply, the total supply of Bitcoin, but I'm not willing to sell it at any price, well, then that Bitcoin's not getting sold. So, and that's what happens is people that realize that Bitcoin is much more valuable than 38,000 cuck bucks, $38,000 of your dirty fiat. When you realize that, then you go, okay, well, I'm not going to sell this, and I'm never going to sell this. And like, that's what people are recognizing is, no, my one Bitcoin of mine isn't worth 38,000. It's not worth 500,000. It's not worth 1 million. It's worth much more. And so as you hold your Bitcoin, or you hodl your Bitcoin, you're rewarded for that. But what you have to deal with is volatility. That's what the reward of holding through all this volatility is the upward price, because the fundamentals never change. There's 21 million cap. Every 10 minutes, more Bitcoin is mined. It's the soundest money ever created. There's all of these second layers that are getting built on top of it in third layers. You have Lightning is continuing to expand. The hash rate continues to grow. So all of these things are just moving at a rapid pace. The fundamentals behind Bitcoin are amazing. Volatility does not equal risk. And so I think that's what a lot of people, they screw up. The fundamentals are good, but the reason why it's volatile is because it's still so new. And a lot of people don't know how to wrap their minds around what Bitcoin is.
Honestly, how are we going to go from like $1 to $10 million a coin without volatility, right? That's impossible.
Yeah.
So, yeah. All right. Hey, this is probably like the last time we're going to get into price this heavy, because usually we don't really look at price. And I mean, price is honestly like at a certain point, it becomes like the most boring thing to look at. I remember when I just came in 2017, I'd be like, I have stared at the Bitcoin price chart like for multiple hours per day, Sean. I was like in the office, you know, and I was so distracted. I was just like looking at the price and like zooming in, of course, at like the 5-minute chart, the 2-minute chart, and thinking I can write some kind of algorithm that will buy high or sell high and buy low and all kind of. You realize there's no, you know, in hindsight, looking back at the chart, it all looks so clear, but we don't know what that next bar is going to look like. You cannot predict the future. You don't know when Russia announces the next big thing, or Elon Musk or Mark Zuckerberg or whoever. Yeah, you just don't know. So the best thing, you know, you could try to, and some people get lucky, most people don't, because you got to realize, like, for instance, oh, I like that idea that it's going to touch the blue line again. Yeah, of course you like that idea, because now you think you can double your amount of Bitcoin, right? Because we're at $40,000 now. If it falls to $20,000, woo, double my stack. But what happens? Let's sell all your Bitcoin. Yeah, let's just do a little thought experiment. You sell all your Bitcoin.
Yeah.
All of a sudden, the chart just, I mean, the chart hasn't changed, but the chart looks a lot different to you. All of a sudden, it's like, oh my God, we're already at the bottom of the channel, and I just sold all my Bitcoin. And now what happens is over the next 3 days, we're gonna go up to say here $55,000, and you're like, damn, I made a mistake, right? It's going up now, and now you buy back, and then it drops and falls too, So a lot of people can't handle being on the sidelines and watching the price go up while they're hoping it was going to go down, and then they buy back higher, end up with less Bitcoin, and then the price falls. So you really, once you start trading,
you lose.
Your life just turns to hell, honestly, because you're going to be constantly in stress. Hodling, only buying Bitcoin and trusting in this long-term growth gives you so much peace of mind. When you get some money, you're like, yes, I'm going to be able to buy some more Bitcoin, add to my stack. You only want to see your Bitcoin stack grow. You never have to worry about making mistakes or losing Bitcoin from trading. Because trust me, the minute you sell it, that graph becomes like your enemy, because it will go up and you're like, oh, I need to buy back, or it goes down. It's just way too stressful. And you cannot predict what it's going to do. And you might get lucky. So maybe for some people it is. And just because you have 3 good trades still doesn't mean that you're not just lucky. It doesn't mean you're a genius, because you honestly don't know what's going to happen in the future. You don't know, right? If Russia hits the nukes or whatever, it's going to have an effect on the price. We don't know if it's going to happen. Yeah, so you may want to like bet on that and be like, I'm gonna double my stack. If it doesn't happen, yeah, the price might go completely the other way and you end up losing. So, all right, enough said.
And here's the thing too, is like what matters is watching your Bitcoin stack go up, not watching the price of your Bitcoin move up.
Exactly.
Dollar terms. You want to see like, okay, did I hit my stacking goal? I wanted to stack half a Bitcoin. I got there. Okay. Now my next goal is a full Bitcoin, or is 3/4 of a Bitcoin, or I've stacked 10 Bitcoin. Okay. I want to stack 11 Bitcoin. I want to stack one more. Like, so wherever you are, the whole point is to watch your Bitcoin stack go up. And it doesn't matter about what it's priced in dollars. And this is what's really hard for a lot of people to understand, because that's fiat thinking. The whole fiat mindset is I'm going to buy Bitcoins and then I'm going to sell it when it goes up, and I'm going to make a bunch of money off of it. Like, what is money? Bitcoin is the best money. So why would you get into the best money ever created, then sell it to go back into a broken money? And that's like the whole thing, is it doesn't make sense to sell your Bitcoin to go back into a broken money. Yeah, you might guess right. You might be flipping altcoins, but most people who start trading, who start like getting into the altcoin casinos, like that's when they lose. And they think like, and then when you lose, then they start betting harder, and then they lose their whole Bitcoin stack. So it's just about getting like in that Zen mode. Zen mode, I'm gonna stack, I'm gonna DCA, I'm gonna smash buy out of every paycheck, I'm gonna hodl it no matter what the price is. And that's what we do. And when you start doing that, it like you sleep easy at night, you don't worry about the price as much. Yeah, you might be underwater from a 69K buy. Oh well, like at least you bought it, and now you're studying what Bitcoin is. What's more valuable is to study Bitcoin's fundamentals, to study what Bitcoin is, to learn the history of money, and to learn about energy and those things that are going to bring conviction to you about what Bitcoin is, instead of studying the charts, because you can only study the charts so much and they don't give you that much. But the Bitcoin rabbit hole goes very deep. It's almost it is an endless rabbit hole, because it has to do with money, and money touches everything. So I have to go right now because I have a workout that I'm going to. But Plan Marcus and I, we're going to start doing some more shows per week instead of just doing this one show a week. And normally we're going to try to keep the Monday ones a little bit longer, but we started talking about this price stuff before the show, and then we kept talking. So we were like, oh man, we better start, or else I'm going to miss my workout. So, but we will start doing some more throughout the week, and they'll be a little bit shorter, probably 20 to 25 minutes. Those ones, and we'll keep the ones on Mondays longer, so we can get into deeper topics. But
we had a lot of news lined up for you guys today. We ended up talking too much about price.
Yeah, that's okay.
Yeah.
Either way, that's going to do it for Bitcoiner's Guide, episode 10. Don't forget, this Thursday, we have Stefan Livera, one of the greatest Bitcoin podcasters, and he's an Austrian economics junkie. He'll be joining the Meme Factory podcast, the same channel, this Thursday at 7:30 p.m. It's live. Do not miss this episode. Again, remember, what you see here, what you hear here, when you leave here, don't just let it stay here. Please share this episode, share our channel, like and subscribe. And we're trying to just share the information that we wish we would have learned when we were first studying, so we could have learned these things a lot quicker. That's what we're here for, is to help. So if you can help us out in any way, that'd be wonderful. As for Bitcoiner's Guide, episode 10 from Plan Marcus and Big Sean, we're over and out. Peace.
Peace. Thanks, Sean. Have a good workout.
Thanks.